Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 22nd of April, 2016, and this is the Daily Report for Gold and Silver, our weekend review in which we combine it with trending markets. We absolutely have some strong downside pressure in the precious metals markets today. Gold trading off about $16 on the day, although it is off the low. Low today, $12.2850. Currently trading around $12.34, $12.35, and that's with a high of $12.54 on the day. So traders, absolutely no doubt, we have had some pretty strong downside pressure in the gold market today. As I said, trading off about $15 on the day, currently trading roughly at $12.35, off of a low of $12.28, and we are long this market. Now, we are long this market from the mid-50s, 56, I believe, with stops below 22. We're certainly taking a little bit of heat on this trade, but we're still in the trade. I want you to have a sense or a feel for why we put our stop where we did and what the anticipation really was. Now, of course, we bought the breakout as the market broke above this long-standing resistance line. I still believe that was a correct move. We saw the market spike higher, but my fear was that when we looked at the way the market was trading, if in fact it would have one more time to actually enter into this compression triangle, meaning that the count that we were looking at, whether it's going to be an A, B, C, something like that, or a 1, 2, 3, 4, 5, and then to get our thrust, is what we've been trying to determine, because we could easily look at a truncated C here and then actually start our Elliott wave count from there. However, my sense was that by putting our stop below 1222, in essence, we were protecting ourselves so that if the market, in fact, did come back into this triangle and held, and that's the key, obviously, and held, and then bounced for that thrust up that I am expecting, then we would still have protection, meaning we'd be long the trade still, and we'd have the opportunity to profit should we get the bounce at the bottom of this range. Now, at least for today, we've gotten that bounce, because as you can see, the market traded to a low of 28, and it has bounced off of that by about $7 on the day. And traders, to give you a better sense or feel for how we saw this market bounce, what I've done is I've converted the chart we were just looking at, which was a half-a-day chart, each candle representing a half a day, to a 240-minute chart. So now what we're looking at is each candle representing 4 hours in time. So we're breaking it into an intraday chart, and what we're seeing is quite interesting. Take a look at this consolidation and congestion that we get here before trading back down. We had similar congestion right in this area, and we certainly see real resistance in the market here. Also, each time it's come to these bottoms, you can see these green candles. Here we get that kind of a base forming before springing higher. Here you get a base forming before springing lower. Here you get a base forming before springing higher. And here on today's marketplace activity, what we saw was that as we went into the close, we got that first glimmer of hope, because we got the green candle. It told us the selling had subsided. Now we'll have to see how this market unfolds on Monday, but at least for now, I believe that we still have an opportunity to see this market find a base in this area and bounce up. If it does not, we have a protective stop below 1222. Obviously, my recommendation is to maintain current position, maintain your current stop. Silver also trading lower on the day, but it's only off 0.09%, trading just below $17 at $16.95, the low $16.85 on the day, and the high $17.34. Traders, no doubt a wild roller coaster ride in silver. Silver spiking up tremendously this week, as well as last week. You can see that this marketplace back at the beginning of April was trading at 1480. It has seen a high of 1760 plus on this last spike up, and this was as recent as yesterday. There's no doubt we are seeing some dojis form in the market. these last 3 days have been highly consolidating days. Now, they can indicate one of two things. They can indicate a period of rest before moving higher, or they can indicate that V or that pivot turn. In this case, that would be a pivot turn from the upside to the downside. Dojis can tell you that. So until we get the following candles that would come on Sunday night here, Monday, of course, in Australia, and the beginning of next week, that should give us a better indication of where this market is going to head. We do have a long position in this market, roughly at 1737. Our stops in place are at 1642. My recommendation is to maintain your current long, maintain your current stop. So traders, in order to really get a better sense for this market, especially when you saw the last 3 days how tremendous the range was, but the open and close being so close together, is really to look at a weekly chart, especially in silver. You can see the dynamic move that silver's had over the last 3 weeks. You can see how it has sold from the high but closed about mid-range. Right now, I am genuinely seeing some strong support in silver at roughly 1660 to 1670, and that is based upon a harmonics. The harmonics that we are looking at, one harmonics or one fib retracement starts from 2151 down to these lows at 1366. The second of these fib retracements, of course, starts at this top right here, which is 1850. Of course, we'll get a harmonics here, but the harmonics is only because we have a top. It's not a true harmonics, but here we do get a true harmonics, which gives it a lot of weight in terms of this particular price point. 38%, 61% retracements, and that, traders, is a true harmonic. So my sense is that this level, meaning 63, will absolutely hold in silver in terms of a price point. Dow Jones Industrial Average, which had been trading under pressure, slight pressure, for the better part of the day, did manage to eke out a gain today, but most importantly, it did close above 18,000 at 18,003, putting it up about 21 points on the day. When we look at our Standard & Poor's, that also traded higher. This, of course, is the E-mini at 2086 and change, putting it up about 4 points on the day. Interesting week in U.S. equities. Obviously a pretty strong week to the upside, considering the low at about 2060 and the high on the week above 2100. This is 2100 here. What is really fascinating to me is we are now flirting with these record tops. The first level, of course, that we need to take out is going to be 2100. And then we've got our extreme highs up here at about, what, 2120, 2130, I believe, is the actual high. So as we are flirting with these highs, I would expect some sort of consolidation, but we do have a strong market right now. So in terms of my forecast and anticipated move in the U.S. equities markets, I do believe that we are currently in a 5 count, 1, 2, 3, 4, and 5. I believe that we are on our 5th wave, and our 5th wave could easily take us to at least flirt with these record areas up at around 2122. Now, we did get a little bit of selling yesterday. We got a recovery today. We'll have to see how this market trades coming into next week, but I believe that there is the opportunity at least to go and re-explore this area at 2100. Crude oil also staging a pretty impressive rally on the week. Today it closed up about 1% and a third, 43.74, but it is substantially higher on the week, opening below 40, and then, of course, closing well above it at 43.74. No doubt a very, very strong showing in crude oil this week. This is our weekly candlestick, and when you consider that this market at the beginning of this week was trading at under $38 per barrel and closes above $43 per barrel, we've seen a sizable move throughout the week, and you can see that by the size of this candle. Now, really, in terms of different levels that we would look at for support or resistance, here's what I want to draw your eye to. And this, of course, is a technical basis. But when we look at our weekly chart, you can see that in this area of 43.44, tremendous support, absolutely. Support right in here. And the interesting thing about this is that it's supportive, and when it breaks above, here it breaks below. Again, you've got a supportive scenario, but here it breaks below. So I do believe that this is kind of that fulcrum point or midpoint within the market. You can really see the highs here, the lows here are about equal. And so to me, oil is in a range that I believe is about that mid ground, and I wouldn't be surprised to see it track roughly in this area and consolidate roughly around the $40 to $45 a barrel point. The dollar staging a pretty strong comeback through the week. Dollar closing up higher on the week, higher on the day, up about 0.5% on the day, closing at 95.09. If you recall, from last week's weekend review, we talked about the fact that as this market was under pressure, that we had identified a price point right around 94 on the dollar index that could provide a supportive area for gold. Now, what we have seen this week was a pretty strong bounce off of this price point as it now tracks to 95 on the dollar index. And when we look at this particular price point across the spectrum of time, we can see that there's really no technical data that can express real strong support or resistance in this price point. This price point right here is not one that I think it's going to hold at. I would look for higher pricing on the dollar index next week. This has been Gary Wagner wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.